January 16th, 2026, 11:23 a.m. Eastern Standard Time. The Royal Canadian Mint website went dark. If you tried to buy a silver maple leaf this morning, the product page was still there. The photo of the iconic design, the specifications, the history, it was all there. But the add to cart button, it was gone. Not grayed out, not showing out of stock, but completely removed from the page like it never existed. The same story for the 100-ounce bars, the commemorative sets, and every single silver product the Royal Canadian Mint sells to the public. This happened exactly 48 hours after the United States Mint suspended all silver sales. Before we go any deeper into this global crisis, I want to hear from you. Check your local dealers right now. Are you seeing any stock? Are you seeing these same outages in your area? Let us know in the comments, because the real-time data from this community is moving faster than the news. And if you want to help us keep reporting on these events that the mainstream media is ignoring, please hit the like button and subscribe. It is the only way to ensure this information reaches the people before it is too late. I got forwarded an internal email sent to the Royal Canadian Mint, our authorized dealers at 1:47 p.m. Eastern today. The subject line read, "Temporary suspension of silver bullion sales." The body was just 3 sentences long. Due to unprecedented demand and global supply constraints, we are temporarily suspending all silver bullion product sales effective immediately. We anticipate resuming normal operations as supply conditions stabilize. That is all the transparency the official mint of the Canadian government felt you deserved. Meanwhile, CBC News called it a precautionary measure. Bloomberg hasn't even covered it. They are framing this like a responsible risk management decision, like the mint is just being careful because silver went up too fast. But let me tell you the truth. This is not an isolated incident. This is not a coincidence. This is confirmation. When one sovereign mint suspends sales, you can call it a glitch. When 2 sovereign mints suspend sales within 48 hours of each other, that's not a glitch. That is a contagion event. The Royal Canadian Mint didn't stop selling because they're being cautious. They stopped because the silver is gone and they can T-source replacement blanks at a price that makes economic sense. As of right now, the panic is spreading to private dealers across North America faster than the media can keep up. You're not here for entertainment. You are here because you want the intel before it becomes consensus, before it is priced in, and frankly, before it is too late to act. And we are witnessing the early stages of a coordinated sovereign mint collapse. The paper shorts, the fractional reserve bullion banking system, and the futures market are all hitting the wall of physical reality. When the sovereign mint of the world's reserve currency stops selling, and 48 hours later, the mint of America's largest trading partner follows suit, the exits are being welded shut. Let's talk about the math, because the numbers here do not add up. And when numbers don't add up in a fractional reserve system, that is when things break. I have been digging into the Royal Canadian Mint's production data, and the reality is staggering. In 2025, the mint produced approximately 30 million silver maple leafs. That breaks down to about 2.5 million coins per month. Now pay attention to this. In the first 16 days of January 2026, before they suspended sales, the mint received orders for 8.2 million silver maple leafs. If that demand continued, January would have seen orders for nearly 16 million coins. That is more than 6 times the normal monthly average, and more than half of their entire annual production from last year. Now, let's look at the supply side. The Royal Canadian Mint does not mine its own silver. They buy refined silver blanks from third-party suppliers. According to my contacts in the supply chain, the Mint had only 2.7 million blanks in inventory as of yesterday. They had 2.7 million blanks to meet a monthly demand of 16 million. That is a ratio of nearly 6 to 1. Demand is 6 times higher than available supply. And you can't just order more and have them tomorrow. Lead times for refined silver blanks are currently running 8 to 12 weeks, if you can even secure an order at all. The refiners are backed up with orders from other mints, industrial users, and sovereign buyers scrambling for strategic reserves. The mint is stuck. They can't meet demand, they can't replenish inventory, and they know if they keep selling, they will hit 0 in days. So they did the only rational thing: they shut down. According to the Silver Institute, the global silver deficit for 2026 was projected at 180 million ounces. But that estimate was made in December. It didn't account for this January panic. It didn't account for the reality that sovereign mints are going dark. If you appreciate this level of deep dive data, make sure you've liked this video. It helps us continue to fund this research. There is a hierarchy to how supply squeezes propagate. At the top are the sovereign mints. They set the psychological anchor. When they are selling, everything feels fine. When they stop, that anchor is ripped off the ocean floor. Suddenly, the paper price, the spot price you see on your screen, becomes irrelevant. It becomes a fictional reference point with no connection to the price you actually pay. Below them are the authorized purchasers, like APMEX or JM Bullion. When the mints go dark, these dealers lose their primary supply and have to fight for whatever is left in the secondary market. That drives premiums through the roof. At the bottom is you, the retail buyer, left bidding against everyone else for the scraps. To understand what is happening right now, you need to understand the concept of contagion. This isn't just a copycat event. It is proof that the entire sovereign mint system is collapsing in real time. Think of it like a series of dams along a river. The first dam upstream, the US Mint, starts to crack. Water leaks through. That leak puts additional pressure on the second dam, the Royal Canadian Mint, because now it has to deal with the normal flow plus the surge from the first failure. Then the second dam cracks. Now the third dam is dealing with the surge from 2 failures. Each failure accelerates the next. On January 14th, the US Mint suspended sales. American buyers who would have bought Silver Eagles didn't just stop buying. They pivoted. They rushed to the Royal Canadian Mint to buy maple leafs. Within 24 hours, the Canadian Mint saw a massive surge in demand from both Americans and panicked Canadians who saw the US collapse and wondered if they were next. The Royal Canadian Mint was already tight on inventory. They were already facing global deficits. Then they got hit with 4 times their normal volume. They couldn't handle it, so they suspended sales. Now where do those buyers go next? They pivot to the Perth Mint in Australia. They pivot to the Austrian Mint. They pivot to Mexico. Each mint that goes dark creates a massive surge of demand at the next one in line. That is the contagion. And here is the trap. Each sovereign mint operates independently. They aren't sharing inventory. They aren't backstopping each other. When contagion hits, each mint is on its own, and each is incentivized to shut down early to preserve what little they have left. As of 2:30 p.m. today, silver spot was trading at $91.85. But here is the divergence that should terrify you. Physical premiums have gone vertical. I'm hearing from dealers that generic silver rounds are seeing premiums of $40 over spot. Do the math. That is a real physical price of $131 an ounce. For maple leafs, if you can find them, premiums are as high as $50. That is $141 per coin. The price on your screen is a suggestion. The price at the counter is a hostage negotiation. That spread is the smoking gun. It is the market screaming that something is fundamentally broken. And now, with both the US and Canada offline, that spread is going to get much, much wider. I know what the skeptics will say. They'll tell you this is just panic buying. They'll say it's like the toilet paper shortage of 2020, that once people calm down, everything will go back to normal. But silver is not toilet paper. Toilet paper has a stable supply chain and massive excess production capacity. If demand spikes, factories run 24/7 and catch up in weeks. Silver doesn't work that way. Silver comes from mines that take a decade to develop. Refining capacity is already at 100% utilization. There is no spare capacity. The deficit isn't temporary, it is structural. Industrial demand is growing for solar panels, EVs, and 5G infrastructure, while mine production is flat or declining. But the most important factor the skeptics are ignoring is China. On January 1st, 2026, China implemented export licensing requirements for refined silver. China controls 40% of global refining capacity. This wasn't a response to a spike, it was a strategic policy decision. They have given their government veto power over all silver exports. Why? Because they see the same data we do. They see the global deficit. They see the vaults draining. They have decided to keep the silver inside China for their own industrial base and strategic reserves, rather than letting it flow to the West to prop up the paper markets. This is economic warfare in slow motion. There are no missiles, just licensing requirements that choke off supply to the West at the exact moment we need it most. They are watching the sovereign mints collapse, and they are doing nothing to help. The mainstream financial media is structurally designed to be late to this story. They aren't trying to give you actionable intel. They are trying to explain what already happened so you feel informed. By the time Bloomberg runs a feature on the sovereign mint crisis, the premiums will be $80 over spot, and delivery will take 6 months. I reported the US Mint outage within hours. I'm reporting the Canadian outage tonight. The media will wait until the situation is hopeless. If you believe this thesis, don't wait for the news to confirm it. Position yourself now. Let me tell you exactly what I am watching over the next 48 to 72 hours. These are the indicators that will tell us if this is contained or going supernova. First, watch the Perth Mint in Australia. They produce 40 million coins a year. If they suspend sales in the next 3 days, that is confirmation that the contagion is global. I am checking their site multiple times a day. Any out-of-stock message there is a massive red flag. Second, watch the premiums at major dealers. If generic rounds hit $50 over spot, the retail market has completely given up on the paper price. Third, watch for delivery delays. If 2 weeks becomes 6 weeks, dealers are taking orders they can't fulfill. Now, here's my personal battle plan. I'm not a financial advisor, but I have been in these markets for 12 years. If the Perth Mint goes dark, I'm moving 20% of my liquid net worth into physical silver and miners immediately. I won't care about premiums then. I just want to be positioned before the rest of the world realizes what is happening. For physical, I'll take anything I can get. Bars, rounds, whatever has the shortest lead time. For miners, I'm looking at SciLJ, the Junior Silver Miners ETF. When premiums are this predatory, miners offer leveraged exposure without the gouging. If the CME raises margin requirements, I will do nothing. They do that to force liquidation and drop the price artificially. I will wait for that panic bottom and buy more. We are looking at 3 potential endgames. 1, a paper market collapse, where the COMEX and LBMA switch to cash settlement because they can't deliver metal. The paper price crashes, but the physical price goes to $200. 2, industrial panic buying, where tech companies bid whatever it takes to keep their factories running, sending the price vertical in weeks. 3, a slow grind where mints stay dark for months, and the market slowly adjusts to a new, much higher reality. In every scenario, being positioned in physical metal or miners is the only move that makes sense. The sovereign mint system is collapsing. They told us supply was stable, but yesterday the US admitted they were wrong, and today Canada did the same. The metal is gone. The window to act is closing fast. If you've been sitting on the fence, now is the time. Don to be the person who looks back in 2 months and regrets doing nothing while silver is at $160. Even a small position is better than none. Thanks for watching Money and Empires. Stay vigilant, and I will see you in the next update.